Alright, for this video I want to cover a sample form 709, which is a U.S. gift and GST tax return. So this is going to be for the 2023 tax year, and in this scenario we have a donor here, J&Q taxpayer, who gifts cash and publicly traded securities to her daughter. And so this needs to be reported on a 709. So we've got the full 709 here, which we'll go through. We've also got the 2023 Form 709 instructions, so we'll reference this as well. And then lastly, we have one slide here covering some background on the 709 and the details on the fact pattern. So who must file the 709s? Generally speaking, these are filed by individuals that are U.S. citizens or U.S. residents. And they have to file them if they make either taxable gifts during the year or they make a gift of future interest. Now, a taxable gift is a gift of a present interest that exceeds the annual exclusion. So not all gifts have to be reported, right? If you have a gift that's under the annual exclusion, generally you don't have to do anything. But if you exceed the annual exclusion, which for 2023 is $17,000, you've got to file the 709 to report the excess as the taxable gift. Now, gifts of future interest don't have that annual exclusion amount. So if you make a gift of a future interest, even if it's below the exclusion, you might still have to file the 709. Now, when we talked about gifting publicly traded securities, the value of the gift is going to be the fair market value of the securities on the day that you gift them to the donee. Now, the way you calculate the valuation is on a per share basis, and it's the mean of the high and low price for the day. So on the day you transfer it, you look up the stock price, what's the high, what's the low for the day, add them up, divide by 2, and that's the mean share price. That's the per share valuation you use. Now on the 709, the donor has to disclose quite a bit of information. So first they have to disclose obviously the number of shares that they're transferring and the specific type of stock. So if you're invested in a publicly traded company and they have Class A, Class B, Class C, and so on, make sure you get as precise as possible and name the class. The CUSIP number for the shares also needs to be disclosed, and then the fair market value per share using that mean price of the high and low for the day. Now, also important here is the donor's basis in the property transfers to the donee. So whatever the donor's basis is, that gets sent over to the donee, and so this is also disclosed on the 709 return. All right, so let's have a look at the fact pattern here. So in the fact pattern, Jane taxpayer is a single filing taxpayer, not married, and she has one daughter, Sarah. And in 2023, Jane made a cash gift to Sarah of $10K, and then she also transferred 90 shares of Meta stock, Meta formerly being Facebook Inc. Now, Jane purchased those 90 shares on August 23rd, 2019 for $177 a share. So her all-in cost basis was $15,930. She transferred 90 shares on July 21st, 2023, and the stock price high and low for the day were $305.46 and $291.20. So the mean price, if you add these together and divide by 2, you get $298.33. Now, in 2020, Jane previously made gifts of $30,000, and that was reported on the 709. So she filed gift tax returns for 2020, and she also made gifts in 2021 and 2022 and filed returns, but there was no taxable gift for the year. All right. Now, before we get into the return, a couple of things to highlight here. Now, Jane being never married means we don't have to do any DSU type of issues. So DSU is that deceased spousal unused exclusion. So if you were formerly married and your spouse passed away, there are portability elections to transfer this unused exclusion, not applicable here. And the type of property transferred here is pretty straightforward, cash and publicly traded stock. But other types of property, non-cash property, much more complicated, transfers to skip persons. So Sarah, being her daughter, is a non-skip person. If you have skip persons, it's a little more complicated. You have GST issues, transfers to trusts. All those make the reporting much more tricky. All right, so let's have a look at the Form 709 here. and we'll start filling out some of these fields. So we've got J&Q taxpayer, so the donor's first and last name, her address, and then her social security number. Box 5 is where she is a legal resident, so you can enter the county and state. So we're in Sarasota County, Florida, and she is a citizen of the United States. Now line 8 is blank because Jane is not deceased, so we've left that blank. She did file an extension for her Form 709, so we've marked that box. And the total number of donees listed on Schedule A is just going to be 1. So we have one donee here. We have 2 separate gifts, but it goes to the same person. So we're going to have 1 donee on Schedule A. Now, lines 11A and B, we have previously filed a 709, so we've marked that as yes. But 11B is no, and that we haven't changed our address since the last filing. So the last time Jane filed a 709 was the previous year, 2022. So she's been filing every year since 2020 after she made that initial gift. All right, so line 12 is a no because she's unmarried, so we can skip the lines through 18. We're not doing any gift splitting here. So on to line 19 and 20. We have no DSU issues. And then line 20, we are not reporting any transfers of digital assets or financial interests in digital assets. All right, so on line 1 and 2, we have to look at Schedules A and B and pull through the current year taxable gifts and then those prior year amounts. So if I scroll down to Schedule A Part 1 is where we list those gifts that are subject to the federal gift tax only. Part 2 is for gifts that are direct skips, so they're going to have GST and federal gift tax issues. And then Part 3 are those indirect gifts and other transfers to trust. So 2 and 3 don't apply in this scenario. We're just working with Part 1 here. So at the top, Item A, does the value of any item listed here reflect a valuation discount? So in our case, no, we're not discounting these for any reason. If you transfer closely held stock, maybe interest in an LLC or partnership, you might have valuation discounts. In this case, we don't, so we're marking that as no. And we're not making any contributions to these qualified tuition plans, so nothing being contributed to a 529 plan, and we're certainly not making a 5-year election. So those don't apply, but we do have to complete Part 1 for the gift. So we have attached a statement to the return because we have more information that can fit on these 4 line items here. So if I scroll down to the attached statement, so we have Schedule A, Part 1 details. We've listed out the donee and the separate gifts. So it's all going to Sarah, but we have separate gifts. We have a gift of cash, we have a gift of property, and they all happen on different dates. So it makes sense to separate these out. So we've got Sarah taxpayer, the relationship to the donor. She's the daughter, and there's her mailing address. And the transfer here was a cash gift of $10,000. So the basis to the donor is $10K because it's cash. The value is $10,000, and the date the property was transferred was February 15th, 2023. Now, we don't have a split gift issue, so the net transfer is simply the same at $10,000. Now on to the publicly traded stock. So we have Sarah taxpayer here, same information. The basis in the stock, so Jane's cost basis, was $15,950. She transferred the stock to Sarah on July 21st, 2023. And then the value on that dated transfer was $26,850. And so that is the 90 shares of Meta at the per share FMV 298.33. So 90 times 298.33 gives us the 26,850. We've also listed the CUSIP number there, right? That's also required under the rules. And then there's no split gift issue, and we're left with the same 26,850. Now the total at the bottom here is the total of the 2 gifts, so 36,850, and we're going to report that amount up on Schedule A, Part 1 in column H. So if I go back to Schedule A, we have Part 1, column H, 36,850. Now once Schedule A is completed, we can move on to Part 4 for the taxable gift reconciliation. So on line 1, we start with the total value of all gifts of the donor during the year. So this is all of the amounts in column H from parts 1, 2, and 3. Well, in our case here, we just have amounts in part 1, so $36,850. The total exclusion for the year is $17,000 per donee. So we have just Sarah there for $17,000. It's not per gift, it's per donee for the total for the whole year. So $36,850 minus $17,000 gives us includable gifts of $19,850. Now on the deduction side, we don't have any that apply here. No marital deduction. If you have charitable contributions that are included in line 1, you might have a charitable deduction here. Doesn't apply to us, so we're left with the $19,850, and we have no GST payable for the year either. So the total taxable gifts remains at $19,850. Now Schedule B, let me go, so I'll show you where that is first reported up here on line 1. So $19,850 is the current year taxable gifts from Schedule A. So now we need to pull the Schedule B line 2 number. So if we go to Schedule B for gifts from prior periods, list out the gifts that were made from the prior periods, but think about it from the perspective of when did you file a 709. So you'll see here in 2020, we did file a 709 because we had taxable gifts of $15,000. So she gifted, it was $30,000 of gifts in that year. There was a $15,000 exclusion. So $15,000 was taxable, and then the amount of the applicable credit for that period was $2,800. In 2021 and 22, we filed a 709, but the taxable gift amounts were zero, and the amount of the credit that was used was also zero. So again, that would happen if you had gifts that you wanted to report, but the exclusion just wiped them out anyway. So if in 2022, for example, she made a gift, but she wanted to file the return just to get it in, and then show that she got a full exclusion, then you would have zero taxable gift and zero credit applied for that period. All right, so we've listed all of those there. Now, really important also to highlight here, when you have gifts over $500,000, you have to recalculate the credit amount that shows up in column C here. If it's under $500,000, you just go back to the return and you look at what was applied. And so more detail on that can be found in the instructions. So if you scroll down to the form instructions on Schedule B, so gifts from prior periods, when we talk about recalculating column C, prior gifts that were totaling $500,000 or less in column C, simply enter the amount of the credit that was actually used in that prior period. So it's easier. If you have gifts over $500,000, you have to recalculate the credit using the worksheets below here. So there are worksheets included where they show you how to work through for each period, how to recalculate the allowable credit. And once you've recalculated the allowable credit, that amount, those amounts for those years would transfer over to Schedule B, line 1, column C. And that's what we're looking at here, Schedule B, line 1, column C. But in our case, we're well under that $500,000 mark, so not an issue for us. All right, so we're left with $15,000 of prior year gifts, and we have a $2,800 credit that was used in the prior period. So when we come back up to the return, we report our $15,000 there on line 2, and then we use the credit from the prior periods on line 8. So enter the applicable credit against tax allowable for prior periods, Schedule B, line 1, column C. So there's our $2,800 figure. All right, so now that we have lines 1 and 2, add those together and we get total taxable gifts of $34,850. Lines 4 and 5, we now calculate the tax. You're using the current year tax tables on line 3 and then on line 2 here. So if I jump to the form instructions again, let me find the tables for the current year. Okay, so we've got the taxes for computing, table for computing gift tax for the current period. And so if we start with our line 3 figure of $34,850, we go to the table and we look for what range we're within. So $34,850, we're between $20,000 and $40,000. So the amount of tax is $3,800 plus 22% of the excess over 20. All right, so remember we're working with $34,850. So let me get our calculator out here. So we have $34,850. and then we are subtracting by 20,000, and we are taking 22% of that excess and adding $3,800. So the total tax on all the taxable gifts so far is $7,067. So that amount is reported on line 4. And now we do the same computation for the amounts on line 2. So $15,000 in taxable gifts from prior periods. We want to recalculate that number. So that one falls within the range of 10 to 20. So we have 15,000 minus 10K. The rate is 20% of the excess. And then we add $1,800. $2,800 and tax for those prior taxable gifts. So we've got 2,800 listed on line 5. Now we add up 7,067, 2,800. Sorry, not add. We're subtracting 7,067 minus the 2,800 gives us a balance of 4,267. On line 7, we enter the applicable credit amount from the tables for the current period. Now note here, it says if the donor has any DSU amounts or a restored exclusion amount, you have to calculate this a little differently. In our case, we have neither, so we can simply go to the table and look up the amount that applies for this year. So if we go to the exclusion and credit amount table, we have the exclusion amount for 2023 is $12,920,000, and then the credit amount is $5,113,800. The $5,113,800 is reported on line 7. All right, line 8, we've already covered that. That's coming through from Schedule B. So we subtract the 2, and we're left with the balance of $5,111,000. Now, line 10 doesn't apply because we don't have any gifts within September 8, 1976 to Jan 1, 77, so it doesn't apply to us. So the balance we have before considering the credit application year is $5,111,000. Line 12, the credit amount for the current period is the smaller of line 6 or line 11. So the smaller is certainly the $4,267, so we enter that on line 12. We don't have any credits for foreign taxes paid. And on line 14, the total credit amount is going to be the $4,267. Now, line 17, we don't have any taxes owed because the amount of our credit is well below the balance we have here of $5,111,000. So in this scenario, we have to file the return to report the taxable gift, but there's no gift tax owed yet, actually cutting a check to the IRS yet, until those credit amounts start to exceed that balance there. And so we're not there yet, and so for this, we're just filing the return, getting this information in, and no tax due with the filing. All right, so that covers it for this video. Hope that was helpful. Any questions, feel free to leave a comment below. And as always, I appreciate you watching, and I look forward to seeing you on the next one. Thank you.